Welcome back, you legends. I'm Dr. Cal. This is going to be a very quick update because I gotta run. Tomorrow is CPI coming in tomorrow. So what the heck is going to happen with CPI? I'll get into that just in a second. Today, all markets are down. Dow, NASDAQ, S&P, everything is down with the exception of energy, healthcare, utilities, and consumer staples. So defensive sectors did okay today. This tells us that this is a risk-off move in the stock market with defensive positioning heading into CPI tomorrow. This is exactly what we want to see heading into a key event. Heading into a key event like CPI, you want to see the market being extremely bearish ahead of a CPI reading because that's a contrarian bullish indicator, right? When everybody's bearish, that's when you want to think about being bullish. The number one thing that I want to point out is this. This is high yield bonds up top, S&P 500 down below. What do you notice? Consecutive higher lows as the S&P has been making consecutive lower lows. What does this tell us? It tells us that smart money is actually bullish while the dumb money, the stock market, is bearish heading into CPI. And usually, guys, the bond market gets it right. Out of the last 12 CPI readings, the smart money got it right 11 times. It only got it wrong once, and that was actually with the smart money being bearish ahead of a key CPI reading, and it went up after CPI. So that was interesting. In all other instances, a bullish smart money heading into CPI usually means we get a short squeeze, a violent short squeeze on the CPI print. Let's jump straight into the 1 hour chart of the S&P 500. And today was a really interesting price action. Actually, beautiful price action that I covered intraday, hour by hour almost today, because a lot of amazing things happened in the market. So let's talk about it. We opened exactly at the falling wedge resistance line. So I was telling all the legends to be careful chasing here. We need to let the market do its thing, watch how it behaves and react accordingly. The ideal scenario from my perspective is we open and sell off for the rest of the day. So that was very interesting. We opened, we did sell off. Then this happened, right? The bulls rescued it. We came extremely close to tagging this falling wedge support line. We came extremely close, but the bulls held price action above the wedge support line. That was the first bullish sign of a change in trend, right? We had a tag, second tag, 3 perfect tags off of our falling wedge support line. Today, the bulls stopped the price from tagging. They came in early, they bought the market, then they rallied all the way up and really tested and broke through the falling wedge resistance intraday, then rejected. This is exactly what you want to see. In fact, I talked about it right here. Bulls held it, price came up short of tagging the wedge support line. This is probably it, folks. This is the first sign of a new uptrend and bearish exhaustion. The sell side exhaustion coming in. They stopped selling before that support line was tagged, indicating that bulls are retaking control. More interestingly is the initial break, and we got that. That was the second sign that the bulls are gaining control, and that is the intraday break of that resistance line of the descending wedge. But what I love to see, especially heading into a key event like CPI tomorrow, any really key event in the market, is I want to see a sell-off into the close. I would really like to see a sell-off into the close. And we got that. We got a gorgeous sell-off into the close. And that allows two things to happen. Number one, if you're a Johnny-come-lately bear that shorted the market really at the wrong time at the bottom here, you would have been able to exit that position towards the end of the day. Number two, if you were a bull that missed that bottom, you were able to enter at the end of the day. And full disclosure, I did enter a couple of positions, in fact, at the end of the day. So number one key thing is that the wedge, number one, it held, price action held above our wedge support. That was the first bullish sign. Second bullish sign, intraday break. That means that this resistance is being threatened by the bulls. The third contrarian bullish sign is the sell-off heading into the end of the day. So that's three bullish signs. The fourth bullish sign is the smart money buying, making this very obvious bullish divergence, higher lows on the high yield bonds versus the S&P 500. This is textbook typical of what I talk about on this channel, guys. This is textbook, very typical of sell side exhaustion, right? S&P making lower lows as the high yield bonds make higher lows. That almost always means that the market is forming a bottom. Now, the really big question is, does the market gap up and rally on CPI tomorrow, or do we actually get a gap fill at 442 first, right? Fill this gap first, initial sell-off, then a rally, or do we just gap up and rally? We don't know. Both possibilities are on the table. I'm not sure if we get a gap fill first or a rally, or do we get a gap up and a rally straight away to the upside, but we're going to get one of these two. That's typical of what happens after we form a bullish, a falling wedge, bottoming structure. So I talked about now four major bullish signs. The fifth bullish sign is the VIX, guys. Look at that. I talked about the VIX yesterday. It was forming this triple top formation with a triple negative divergence. It's more clear on the 2-hour chart. Here it is. Exact copy of what happened back here as the market was bottoming in the middle of March. In fact, let's add the SPY on here so you guys can see. Look at this. Coincided perfectly with the bottom. And very likely now we are bottoming on the SPY. This chart right here is the SPY, guys, in the blue and black, this little chart. And there it is, guys. Very likely now we are forming a bottom. Again, do we get a gap fill 442 first and rally, or do we get a gap up and rally? No idea. I tend to lean towards a gap up and rally. That's I give a slight edge to that because I think the market is due for a violent short squeeze. That's usually what happens, guys, when the market is extremely bearish ahead of an event, and then that event surprises. And then the event surprise to the bullish side, we usually get a violent short squeeze. And the opposite is true when the market rallies ahead of a key event, and then that event surprises to the bearish side, we usually get a violent sell-off. So let's talk about CPI tomorrow, guys. Expected year-on-year inflation rate. The consensus is at 3.3%. If we come anywhere at or below this reading, I expect the market to either hold or rally or just straight rally. Core inflation, if we come below 4.8%, very likely the market rallies. In terms of expected moves, the market expects a $4 move tomorrow, right? So $4 in either direction, so either 442 or 450 by tomorrow. Sometimes, guys, the market does end up undercutting or overshooting the expected move, but the expected move is $4. So again, 450 or either 442 by tomorrow. We'll see what happens. After tomorrow, we'll get the PPI inflation report as well, and the Michigan Consumer Sentiment Index again. So if CPI surprises to the downside, coming in cooler than expected, the market will react very positively, especially after all of that selling that we saw in the last couple of weeks. On top of that, if PPI comes in again below expectations, another follow-up rally on Friday is likely. In fact, a rally all the way to fill the gap at 456 is very possible. A $10 move in a handful of days, either by Friday or by next Monday. I covered all of that and more in the trading community intraday today. It was a very cool day. I did make a small trade today, and I used the profit from that trade to initiate a very high risk, high reward trade that could yield 1,000% in a couple of days. Pretty much zero cost because I used my profits to initiate this trade. We'll see if it works out. If it doesn't, that's okay. That's the nature of the market. By the way, guys, just a quick reminder again, guys, I do have a big sale running in celebration of the anniversary of Money Time Machine. This 70% sale on the annual Resurrected Legend membership will end this weekend. I also have 54% on the Resurrected monthly Resurrected Legend membership. The Resurrected Legend membership, guys, is a complete free upgrade to the Living Legend membership, right? These were both were called Ghost Legend memberships. And the Ghost Legend membership does not allow members to post anywhere in the trading community, only observe and only receive my analysis. This free upgrade gives all Ghost Legend members Living Legend status. Okay, that's why it went from Ghost to Resurrected, right? Bringing them back from the dead. So Resurrected Legends get all of the benefits of the Living Legend membership at 70% discount on the annual membership. Make sure to click pay annually. Otherwise, the payment will be canceled if you want to go with the annual membership. If you want to go with the monthly membership, you can go ahead with the Resurrected monthly membership. Don't go for the Living Legend membership because, guys, it's exactly the same. This is a one-time promo that I'm running that I'll probably never do again. This is the deepest discount I've ever done, 70%. So if you've been thinking about signing up, this is the perfect time to do it. Obviously, guys, you do not need to sign up to anything. You do not need to pay for anything. I just appreciate you watching the videos, liking the videos, commenting, giving me feedback. I appreciate all of that. You don't need to pay for anything. But if you want my daily analysis, my trades, my investments, my trade setups, I shared half a dozen setups just in the last couple of days. You can get all of that in the trading community. Now, let's quickly talk about the triple Qs. Again, gorgeous, gorgeous falling wedge pattern. This is a very bullish pattern, guys. Falling wedges usually lead to massive, massive bull rallies. That's usually what happens. You want to see a falling wedge that connects with a key support level. Right here, we have the 50-day moving average and the gap fill 368. So a lot of things coinciding with a perfect tag of this key support line. And now I expect a short squeeze rally off CPI and PPI. That's the most likely scenario in my humble opinion. And my target is 379 to tag the lower edge of this gap and potentially even higher to 383 to fill the gap all the way up from August the 1st. That's all I have for today, guys. Thank you so much for watching. If you've watched till the end, thank you so much. I appreciate it. If you stuck around till the end and you did not enjoy the video, I still thank you for your time and attention. And I'll catch you all legends in the next one. Bye-bye.
Oh, wow.